So Condor Gold, we're a gold exploration company. Our business model is completely different from the previous presenter, so it's worth me just introducing the company with a comment on that. So we explore for gold, we drill for gold, we find it. We've been very successful in doing that. Our core area of operation is in Central America and Nicaragua, where we've put in 55,000 meters of drilling over the last 4 years. And we found the biggest gold resource. That's all independently verified. So we have 2.33 million ounces of gold. And that's, we do all our essay results up in Canada, and that's verified by SRK Consulting, who are a major consulting firm in the UK based in Cardiff. So we're kind of valued by the market on a number of metrics. Sometimes it's ounces in the ground, sometimes it's on NPV for the project. You can slice it and dice it in a few ways. Last year, we completed about $5 million worth of studies, which were all aimed at proving the economics. So the first thing a gold exploration company does is find the gold. So we got 2.3 million ounces, that's $2.8 billion worth of gold in the ground. Okay, so you know it's there. The next part is to say, is it economic, can we get it out? So we've done those studies last year, and we've then got reserves, and that's process is converting resources which are uneconomic by definition to reserves once you've done a whole load of studies. So I'm going to spend a bit of time talking about that. And then we need to go through the next step, which is getting permits and to continue to show the upside for the asset. And we then get to a point where we decide, do we build this? Do we build this ourselves? Sorry, being Italian here. Do we build this ourselves, or do we actually sell the project or joint venture the project? So I'll go into the presentation. That's our statutory disclaimer. So looking through and introducing the asset, the reason we picked this up, I've been with the company for 8 years, is that it's a historic mine. And it produced 500,000 ounces of gold at 13 grams. That's a third of an ounce. It's super high grade gold. The average gold deposit in the world is around about 1 gram for any open pit. We've defined this resource I mentioned of 2.3 million ounces. The key feature is that we've got high grade of 1.1 million in an open pit, and we've got reserves of 675,000 ounces. That's the defined, definite economic part. We've got all-in sustaining cash costs of $700 an ounce. Quite important. If the gold price today is approximately $1,200, it might be $1,185 last night. So even if gold falls lower, we can make a profit. The upfront capital costs are quite low, and that resource is only confined to about 10% of our district. We've got excellent infrastructure, and we have to build roads for 80 kilometers into the jungle or the Arctic. Unlike some people, we have power lines going through the project, and all those are key to keeping the costs down on a mine. And we're in a country where gold is the second biggest export. They love gold, and they want us to put up the next mine. So that's a quick introduction. The management board, I've been with the company for 8 years. I started as non-exec chairman, and for the last 4 years I've been full-time. I bought 8% of the company in the stock market. There's no free carried interest for me on the way in. So I'm an 8.5% shareholder. Jim Mellon, who's speaking today, has been on the board for 3 years, and Jim and his directly and indirectly is a 9-10% shareholder in the company. We also have the IFC, part of the World Bank investment arm, is an 8.5% shareholder in the company. So we've got some pretty good shareholders who've all visited the project, and who think we've got something. I'm supported by mining engineers, geologists on the board, and then by someone from a chartered environmentalist called Kate Harcourt, who recently joined from the IFC. We got a team of 50 people on the ground in Nicaragua. We've got 4 geologists, we've got attorneys, helping with the social side. I've built up a good team. Part of my job is I spend 1 week a month in Nicaragua making this happen. Actually, on Monday I'm going to Cuba for 4 days on a trade delegation, and then we're I have 10 days in Nicaragua after that. So I have, on average, 1 week, 1 month there. I'm really hands-on with it. We've got a good team on the ground, is my point here, and that's part of what you're doing in anything is backing the people. So the strategy, we've proved that on our pre-feasibility study that we've had 80,000 ounces a year for 7 years. If we optimize the main pit, add in a couple of feeder pits, we get to 100,000 ounces a year. for 8 years. And if we add in a bit of underground, we've got 140,000 ounces. So we're progressing the pre-feas to feasibility, some of those studies. And the second part we're doing is we're very good at finding gold. We want to show the upside, so we have one drill rig turning, which I'll talk about, to just show we've got a lot more gold. And then we need to de-risk it now. At this land acquisition, we've got to buy the surface rights, which we don't own. We own some of them, but we need to buy them this year or lock them down, and we need to get permitted. So that's our strategy. Nicaragua is just above the 2 countries above Panama. More people here are familiar with Panama Canal. And we are on a paved road up from the capital. That's the Pan American Highway, and we're just off it. Here are the 3 other producing mines. It's a stunningly beautiful country, and it's sort of developing, but it's also the poorest country in South America. That's why they want mining to alleviate poverty. We will create 400 jobs. B2 Gold, the biggest gold miner in the country, so you can own 100%, is the biggest corporate taxpayer in the country. So the government get that, and they're pro-mining us. And you can own 100% of everything. So I said, why Nicaragua? I've mentioned some of these points, but having 25-year concessions for exploration and exploitation is pretty key. The government is being super encouraging at the moment. I would just mention that we signed a deal in December with the Inward Investment Agency, whereby the Inward Investment Agency, which is run by some very senior people in the country, of hiring a couple of attorneys for us that work for them, but they're assigned to us full-time. We pay them a fee, and that's going to help basically de-risk the project from the permitting side. I can't stress that that's really important. So they're going to help us clean up land title and get permits. And so that's the government coming to us saying, well, actually I've been working with them for 2 years. We want to mine here. The next step is permits. You sometimes hear in mining that people get stuck because they haven't got a water permit for 2 years. That's not going to happen in Nicaragua. We're totally engaged with them to get that. But you can own 100%, you can get the capital out. You know, it's not 20% free carried interest like some places in Africa. It's been politically stable for 25 years. It's not the Arab Spring or a coup d'etat in Côte d'Ivoire. Or, you know, it's been stable. They had their revolution in '79. They got that out of the way, hopefully, and so we're in a good jurisdiction. The economy is growing at 5% per annum for the last 5 years, and tourist arrivals up 25%. So showing the safety positioned from the tourism side. Here's the project. The Pan American Highway is just off the right. It's taken me 6 years to buy up all these concessions. It's quite big. And here's the gold. We've got presentations here. I should say we've got them on our stand. They've also been handed out to people. The blue bits are the gold resource expressed to surface, and the red parts are veins that we trenched, but we don't have resource on. So the implication here is that you've got gold on the surface in these red veins, and you can double this ounce resource to 5 million ounces. Here's the resource numbers, 2.3 million. You've got different categories there. We've got the open pit that's attractive, 1 million ounces. So we focused on the open pit for the economics because that's the cheapest thing to get into quick cash flow. Here's the reserve statement, all independently verified. Cost a fortune, but you've got to do these things properly. And that's an impressive grade at 3 grams. The average is 1 gram. That's why we've got good economics. This just zooms in again. We've got the concession, the road running through the concession down here. That's just fantastic for mining. It keeps the capex down. Here's the 1.3 million. We have 900,000 ounces in the main pit and 300 underneath it. And we have little feeder pits, which I talk about here. These are high grade again. So this is all quite close. It's not sort of, scale-wise, we're 2 kilometres. It's not 40 kilometres away, which you've got a truck. Here's some of the economic matrix for the pre-feasibility and PEAs. PEA is sort of the American phrase for what we would call a scoping study in this country. And it's not necessarily economic, but it shows you what it could do. We've applied the same matrix that we have in the reserves where we have done all these studies. So the highlights to point about this is, here's your contained gold. Now, this is open pit. So that's the main pit. That's the main pit optimized. We're adding another 100,000 ounces in there plus feeder pits. And there's your 850,000 ounces of gold. So times that by the current gold price of $1,200, and you can see you've got over $1 billion of revenue coming out of here over the life of mine. And then really here we've got great recovery rates. Metallurgy can mess up a mine. We've got 91%. We've got 100,000 ounces a year. We've got 8 years production. The all-in sustaining cash costs of 700. You've got operating cash costs. You've got to look at all-in sustaining, which is your sustaining capital. People often forget that. So the mining industry has been guilty of sort of always putting its upside. But that's a great number. Basically, if you think about it, we could produce 100,000 ounces of gold. If gold's $1,200 an ounce, all-in sustaining is $700 an ounce. You've got $500 per ounce free cash flow coming out of it. So $50 million free cash flow a year. You can then start to put NPV numbers on the back of that. That's one simplistic way of, I have an issue with that, don't I, doing it. Our operating cash costs, now I appreciate we've got a lot of generalists here, but one of the things to look at this when you're analysing gold companies, exploration companies, is we talk about grams per tonne. How many grams of gold are there in a tonne of rock? So if you take the gold price, divide it by the number of grams in an ounce, there are 31 grams in an ounce, take the gold price, divide by 31, that's a life of mine gold price. You've got every tonne of rock containing 1 gram is worth $40. So we say, oh, that tonne of rock which we can see is worth $40. Our open pit is 3 grams. So a tonne of rock in our open pit is worth $120 before we've moved it, before we've blown it up, moved it, crushed it, grind it, and so forth. So what we then look at, and what my average operating costs are $55. So we can look at when we've got 1 million ounces of this rock of $120 contained gold within that rock before we touched it. To blast it, mine it, put it to the plant is $30 on average. To process it, crush it, use cyanide, and get the gold out basically is $18. To refine it is 0.27, G&A is 3.8. So you can see that the average cost, if you top those up, is about $52. So this is why we got a project. These are all done very conservatively, independently. $120 rock, $55, 52, 55 to basically turn it into gold. So I'm going to skip through these because it's a bit technical. This just shows you pit angles. We spent $500,000 doing this. If you've got an open pit, you don't want the pit wall to collapse, in a rain event. So we spent, this is all done really well. That's the pit design, the open pit, the waste dump where you move the rock that's unmineralized, storage, plant will be about here, tailings will be over here. There's a sort of a schematic of the plant layout. Again, this is a sort of $300,000 study to give us, they visited site. We've mineral processing, we've got good metallurgy. It's an old mine. We know that the metallurgy isn't going to mess up the project. Here's the tailings, so that's where the stuff going in the plant. It's 3,600 tons per day of rock goes in. The same amount comes out in a slurry. It goes into this. It's PVC lined. That's cost $14 million over the life of mine. So it's a real good study. Again, here's the layout that we've done. We're having to move the road back a bit. Here's the tailing. Here's the plant. And there's a hydrology, terribly important for a mine. For every ton of rock you crush, you need a ton of water, roughly. We have enough water. We've had pump tests to prove it works. So all this stuff creates big value for our shareholders. We have 32 monitoring sites around the pit for water, surface water, hydrology. All this is important. Capital costs, again, independently verified. We've got the base case of the reserve is $110 million. That includes a 10% contingency and 15% for EPCM, so i.e. someone else building this for us. So one of our options is we turn around to the people who've given us all these quotes and say, build it for us. We subcontract it, so we have that option. This is our route, the preferred one of $130 million. This is geophysics. I've got 5 minutes left, so that's all this is showing you is 1.3 million. There's our resource here. Those are the drill collars, but you've got a big gold district. What we're doing at the moment there's your pit, 1.3 million ounces. We've got results back for this. We soil sampled. So the magnetic survey, we flew this with a helicopter, the whole project, shows a fault here. The gold fluids come up through a fault. We think this continues. We're testing it. We've moved a drill rig this week onto it to show the upsides. If we get good drill results, that can be a game changer for us again. But here's our share capital structure. We have 45 million shares outstanding. The options and warrants are all way out the money. We've got a $45 million market cap. We had $7.5 million of cash at the end of the year. We've decided as a board that we don't want to run out of cash. We don't want to go back to the market this year if we can possibly help it. So I'm hoping to end the year with a couple of $1 million of cash. There's the shareholders, which I've discussed. Here's a share chart. Just bear in mind, we're linked to the gold price. So if you're negative on the gold price, don't buy Condor or any gold company. Just don't do it. The gold 2 years ago was $1,650. It's off to $1,200, so it's fallen. We've fallen along with that. That's nothing to do. In fact, what we've done in the last 2 years, we've massively de-risked the project. We've spent another $10, $15 million on the project, and we've got the reserves and so forth. So market analysis, we're 1.5% of the gold price. So for each, if we take our market capitalization, divide by the number of ounces we've got, we're 1.5%. We're $17 an ounce in the ground. That's one way of looking at it. These companies, when they get taken out, there's an example here where B2Gold, a Toronto company, bought something for $125 an ounce in the ground. There was an announcement a month ago, it's just completing in Mexico, where a company was bought for $60 an ounce in the ground. So at this point in time in the market, the trade is now buying. You can look at half a dozen deals this year. It's much cheaper for them to not take the exploration risk and put $25, $30 million in the ground like we've done. The share prices are off. They're taking a 10-year view, and they're saying, okay, this is now de-risked. It's got the metallurgy. It's got all the studies. It's all independently. They can look at a 280-page report on our website. So one route. So this, we think clearly this is the simple way of valuing the matrix. I've got a couple of minutes left for questions, but that really concludes my project, my talk about the project and the India project. So if there's any questions, I'm happy to take them.